Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 51st and basically the last COT report this year. Before I go on, I just want to wish everybody a very happy new year. And sorry about my voice, I have a kind of a sore throat now, so I'm going to be a little bit strange for those of you who follow my reviews. So let's get started and have a look at the changes in commercials positions. Here we go. As you can see, we've got Dow Jones, S&P 400 on top, followed by Palladium. Let's open Dow Jones first, where we have a 35% change in commercial positions and a 38% change, as you can see in large speculators. You can see the changes over here. Much larger than average, which is what's interesting is they're pointing upwards, meaning bullish signals, and all this happening after a pretty nice rally in prices. So we can see basically this 2013 year being a pretty positive year in Dow Jones. But anyhow, so the change is signaling prices should go higher. As you can see, we have larger changes in the past that usually coincide with bottoms or tops, meaning that these changes signal well. Basically, these price reactions. But let's move on and have a look at the 5-year chart and see how extreme this market really is. And what's interesting is we're moving away from bearish extreme levels. So you can see this was our last major, might even say all-time, or at least close to all-time COT Extreme, which was a bearish extreme. So looking at this rally and seeing this these COT charts right now, basically it's telling us that this rally can easily continue for some time now. And that's a pretty interesting thing. If we would be moving in the same direction, meaning let's say large speculators headed below the zero line, that would actually mean we are in a bullish COT Extreme, which would be quite interesting to see at such levels. So that's a very interesting picture we've got in Dow Jones right now. But let's move on and have a look at the S&P 400 market. We have 28% change in commercials positions over there. You can see the change over here, again pointing upwards. Of course, these markets correlate, no question to that. So we're not surprised. And if we open a 5-year chart, I believe, again, yes, I was suspecting that we have moved away from these bearish extreme levels, telling us, and we're more of in a neutral zone right now. We can't really talk about a large extreme, maybe a relative one. But as you can see back over here, the end of last year, this was a bullish type relative extreme that could end this little decline over here in prices. But it's quite interesting to find this when prices are so high. Well, COT is telling us that this rally can continue also in S&P 400. Palladium, next market, 28% change, the same change size in commercials. Here we go. You can see the change visible over here. Barely visible because more or less we've got such changes in Palladium. I wouldn't say it's an average change, a bit larger, definitely. 28% is considered large. So it's, of course, pointing upwards. It's a bullish signal. And let's have a look at the COT Extreme. Here we go. You can see that similarly to the indexes previously, we're moving away from these bearish extreme levels, meaning that, but in this case, as you can see, prices are declining. So we do see price reactions towards the COT signals. Basically, it's going on right now, and until we reach levels on this 5-year chart, you can see if commercials could reach close to zero net positions, basically. I wouldn't say moving into net long positions, but that would be definitely a bullish extreme that may push prices higher. Moving on to large speculators COT Extreme. Here we go. Cocoa All Time Extreme still on our list, on top of our list. Not surprisingly, All Time gets you there. This basically means that the extreme is widening in the cocoa market. So let's open the 5-year chart. Here we go. And still, I'm just repeating myself, as I said last time, and I believe a few reviews before as well, that this is a bearish COT Extreme. There's no question to that. And as you can see on the chart previously, these signals were pretty effective. So I'm still saying that this is looking at the chart is a very good opportunity on the short side of the market. The Japanese yen, let's move on. We have a 338 report extreme in large speculators, 339 report extreme in commercials. Prices are still declining. We've been talking about the Japanese yen a few reports ago, and I was telling you that even though we have this huge extreme, the chart itself suggests that this can continue. I mean, chart, and of course the fact that we had this commercial capitulation over here when prices did not react, and that momentum is still in prices, I believe, and we may see a much larger extreme. I just want to show you a 15-year long chart, just to have a little view on where we have the all-time level. We're not that far from it, so that's going to be an interesting point over there. Of course, this extreme may widen even further, and we may see an even greater extreme before prices start reacting. So again, warning, this is a 15-year long chart. These are monthly candlesticks, so I mean, prices could easily go down for another 2 more months, and the picture would still be basically the same. So it's quite hard to pinpoint the exact location of the bottom. And then we have S&P 400, Dow Jones, and Palladium that we've talked about. So I believe that's going to be it for this review, our last review for the year. But hey, I'm going to be here next year, and I hope you're going to be joining these reviews in 2014. For those of you who are new to the service, I recommend you to check out our COT analysis page. You can add other useful functions to our table: the long-term trend, volume open interest scores, and the COT index. These are functions that really widen the equipments you have analyzing COT data. Of course, you can look at new COT report types, data types also. So I hope you enjoyed my review, and I hope to see you next year. That's going to be next year. I believe it's the 6th of January when the next report is going to be issued by CFTC. So I believe the 7th I will be giving you my next review, the first one in 2014. So again, I appreciate your attention. Take care. Have a great weekend. Take care. Bye-bye.